Hey, I'd like to welcome you to another episode of Money Matters Top Tips for Success, where each and every day I bring on new business owners, entrepreneurs, and executives and have them share their top tips for success with you. My name is Adam Torres. You can follow me on Instagram at AskAdamTorres. Keep up with my book releases, book tour schedule, signings, all that other good stuff. Always love to connect with you there. And as always, if you'd like to apply to become a co-author of one of my upcoming books, just head on over to the website, moneymatterstips.com, and click on Become an Author to apply. All right, so today is a very special reunion 2020 episode. What's that? That's when I bring on a guest I had on in the past because I liked him so much I had to bring him right back. So today's guest is Sean Harper, and he's co-founder over at Kin Insurance. Sean, welcome back to the show.
Thank you. Nice to talk to you again.
Oh, man. So likewise, number one, but number two, I saw some of your proposed topics for the show, and I'm like, the impact of climate change on the home insurance market. Could you have picked a hotter topic? I'm loving this one. But before we get into into the topic, let's start off. We had a lot of growth in the podcast, had a really blessed year last year, and I just want to not assume that everybody heard the first episode. So let's start off with what you're doing over at Kin Insurance and what makes you unique.
Sure. Yeah. So Kin is a tech company that provides insurance, and we insure homes and other small buildings in places that are pretty risky, where wildfires and hurricanes and floods and that kind of stuff happens. And what's really different about us is that we do it with a lower cost structure because our technology is so new and advanced. It's cheaper for most people. We do it with more data. So, you probably filled out an insurance application or had to talk to an insurance agent and ask you all these questions. With us, we don't have anywhere near as much of that because we're using things like aerial and satellite imagery and advanced weather models and stuff like that to automate it. So it's really, it's exactly what you want in insurance. It's easy to sign up for, low hassle, and it's, on average cheaper than all the other guys that are out there. And the basic idea behind Kin was just, the average insurance company was started between 1900 and 1930 in the United States. Yeah, and they're just not built for, the world is moving faster, where people live. And the amount they move around is changing. It's accelerating. The types of data that are available are accelerating. And as you pointed out, because of what's going on with the climate and stuff, actually the weather is changing at an increasingly fast pace. And, these insurance companies that were started in the 1930s, they just really aren't built to respond to a world where things change a lot. They were just built for a much more stable, slow-changing world. And it causes them to have a lot of trouble dealing with it, which we don't have as a company that was started recently on a really modern tech stack. We have the advantage of a blank sheet of paper.
Yeah, it's amazing. And when I look at what you've been able to accomplish, and it just makes sense. So as funny as it sounds, even though, some of these incumbents, so to speak, that have been they've been the top players for a long time. It just makes sense. Like a company like yours, a start, you don't have the same legacy systems. You don't have having that blank sheet of paper and being able to design for today's world provides a whole different experience for your clients, and obviously that is direct and many times to a better cost structure. I think that was a great transition, by the way. Let's get into climate change. Let's get into what that's doing in the home insurance business, because I want to know.
It's doing a lot of things. So one interesting thing is people are not moving away. So climate change is making the weather worse. It's making it worse in places like Florida, where the hurricanes are bigger and stronger and actually slower moving, which creates a lot of problems than they've ever been before. And it's making the weather worse in California, where the really strong winds and really dry conditions are causing wildfires like we've never seen before. And it's making it worse, everywhere in different ways. It's basically making the weather that we had stronger and more volatile. Now, weirdly enough, people are not moving away from these areas. A lot of this is happening near the coasts, and actually, a lot of people ask me, like, oh, what's going to happen when everybody moves away from the places where the weather is? And that's not happening. Actually, the opposite is happening. People are moving from the middle of the country to the edges of the country where these weather happen. And So that's happening, and as a result, you have more people and more property than ever before that's exposed to extreme weather. Now, the legacy insurance companies have a really, really hard time dealing with this, and one way they deal with it is just by pulling back out of these markets. So in Florida, for example, which is our biggest state, and our home state in many ways, the big carriers that have television commercials like Allstate and Nationwide, State Farm, they actually don't do home insurance there, or they do it in a very minimal way. And the reason is that they're really not built to deal with that kind of volatility. And so they end up having really bad results, and it causes their stock price to go down, and that's not what the people running those companies want. The other thing is so that's having an impact. More properties exposed, fewer insurers are actually doing it. The other impact that's happening is prices are going up. And in a lot of these places, it's becoming, insurance prices will go up 20%, 30%. In California this year, in California, a lot of prices are going up 100%. And that's a big deal. If your property insurance price doubles, it changes your standard of living. Now, we can't do anything about the weather. What we can do is two things. First of all, we can, insurance companies spend a lot of money paying claims, but they also spend a lot of money on their overhead, right? They're doing manual things that could be automated. They're paying brokers, middlemen actually are about half of the cost structure for an insurance company. And we can eliminate those things and pass the savings on to the user, which mitigates the impact of the weather on their finances. And then the other thing that we can do is there is a difference. In these areas, not every home is equally impacted. Some homes are built better. And we can figure out which are the homes that are constructed to be more resilient to the weather. We're not helpless. We can actually do things to our homes and the area around it that make us more resilient. And so one thing we do a lot of Kin is we crunch a bunch of data to figure out which homes are more resilient, and we're able to offer those people a lower price. Now the flip side of that is sometimes we'll have a higher price for the homes that are not as resilient or maybe more exposed. But that's actually okay. It creates a really good incentive for people to make the investment to make their home safer.
Wow, that's it just when you explain it like that, it just makes sense. So if you don't have the same overhead, you don't have the same cost structure, that there's room to really just, I won't say refund, but to lower price to basically let the end user, which is the insured, benefit from the savings also. So that's just amazing. The concept, the way you're pulling it off, and at the quantity. And in terms of trends, I think I remember being a kid looking at growing up in Michigan, and I look at Florida or some other places, and I'm like, man, why do people live there? Because in Michigan, nothing happens, right? Or not really, not often. And I remember being a kid those people are crazy. Why would they live there? And now I live 5 blocks from the pier in Santa Monica, and I'm like, there's a fire, big fire, not too far from me, and I'm okay with it. Not that I want it to happen, by the way, obviously, but I'm not considering, okay, am I gonna move because this fire, or and I'm like, no, I didn't even think about it. I'm just not gonna drive in that direction. And
Santa Monica's beautiful.
Not making light of it for the people that are affected, by the way, in their homes, all terrible, but I'm not leaving, and they aren't either. So what you said is really interesting. The people that Malibu, all these other places, they're not leaving. They're rebuilding. They're doing something else. They're figuring out their lives are there. If they have kids going to school, all that other stuff, their lives are there. People don't leave. I think it's really interesting that you bring up.
Yeah, and this is the thing. It makes insurance, insurance is the boring thing, I get, but to me it's exciting. And the reason is, if you think about why insurance was invented, it was really invented originally to allow ships to explore across the Atlantic Ocean. And it was a really big deal if you were the owner of the ship or one of the investors in the ship and it sank because the weather was bad. You could lose all of your money. And that's really when Lloyd's of London and sort of the London insurance market started, which is the basis for all the rest of insurance, was to allow something, by spreading out the risk, to allow something that was otherwise impossible to be possible. And that's what we're doing now with property insurance. Is actually, if you were not able to get insurance, you might not be able to live in Santa Monica. because you'd be thinking about it differently. You wouldn't be thinking about it, oh, I need to pay X thousand dollars a year to insure. You'd be looking like, oh, crap, if the wind blows the wrong way, I'm done. And that's totally different. And so I think it's exciting to be able to like allow people to continue to live their lives and be able to spread the risk out in a way that's beneficial to everybody.
Man, that's awesome. And I have to disagree with you on one thing. Insurance was boring. It's no longer boring the way Kin Insurance is doing it. This is awesome stuff. I mean, you guys, that company, it's really cool what you're doing, and how you're pulling it off. I mean, it's inspiring to watch. So Sean, if somebody's listening to this and they want more information on Kin Insurance or to learn more, I mean, what's the best way for them to connect?
Best way is just to hit our website. We're online at kin.com, K-I-N. It's kin, like family, and we take that really seriously. We treat our customers like family. It's got really good online reviews. Just hit us up there, and we're available on, you can actually go all the way through the site, and if you're in an area that we serve, we can give you insurance in seconds online. But, sometimes people have questions because insurance is complicated, and we also are available by text message or online chat or email or on the phone to answer whatever insurance questions people have.
Man, you guys are so fancy, even text. I love it. That's awesome. Well, hey, Sean, really appreciate you coming on the show today and sharing more about your background, all the other great stuff that you're doing over at Kin Insurance to protect families. That's what's amazing. And to the audience, as always, thank you for tuning in. Hope you got a lot of value out of this. If you did, don't forget, subscribe to the podcast. If you're watching us on our new YouTube channel, Money Matters Top Tips, don't forget to give us a subscribe there, and also leave some comments in the video section. Love to hear your thoughts on climate change, the future of insurance, all those great things we talked about today. And Sean, thanks again for coming on the show.
Thank you. It was fun.